Hello guys, welcome back to another lovely trading video. This is being recorded on August 3rd, so obviously prices may have changed when you're seeing this because this is most likely going to be uploaded on Saturday the 7th of August. But I just recently realized you can add in foreign indexes onto Thinkorswim. That includes the Ftse 100, so UK, DAX, which is German, Nikkei, Japan, HSI, which is Hong Kong, and I think it's a CAC, which is the French index. So I was just going to go through them, kind of do a quick breakdown on them so you can see the kind of levels I would be looking at to either invest or swing trade or maybe even day trade off those kind of levels, because I do the US markets a lot but didn't realize I could also do other markets on this platform, so I will start doing those a bit more frequently when we're seeing reactions in a certain market, whether that's Ftse, DAX, and so on. So firstly we'll go over the Ftse 100 first, and you can see obviously we had that big pullback a few days or about a month or so ago on, I believe that was maybe inflation worries, but all markets pulled back for that, and as you can see would have provided a great opportunity for the Ftse 100 as a buying opportunity coming into this first deviation. Also, if you've never watched a video of mine before, these are called standard deviation channels, and are basically statistical probabilities of the stocks kind of bouncing. The orange lines you see here, it's roughly a 68% of chance, oh sorry, not bouncing but more 68% of the time stocks will, or the stock will trade, or the ETF will trade inside these orange lines. The blue lines are the second deviations, and 95% of the time stocks or the ETF will trade within the blue lines, and 99.7% of the time it will trade within the green lines. So if you ever see kind of like an index like a SPY, or like the S&P 500, Ftse, DAX or anything near the second or third deviations, they can be great time to invest into it. However, going down to the breakdown, obviously we saw it pull back to that level and would have provided a good buying opportunity. However, what we're looking at more for the future is we will most likely see it return to this kind of midway deviation of around 7,250 to around 7,200. And this will kind of be the decider of whether we kind of break through or pull back off that level. But either way, we would be looking to kind of not get short, because I don't like to short the indexes, but instead, if you're in it, that is kind of an area I would look and profit around the 7,400 to 7,700 areas. However, if it does end up choosing to pull back, a good long area would definitely be 6,900 to around 6,800, and we would most likely get a bounce within that area back up to this midway deviation. And again, you could always short it coming into these areas, because most likely it will bounce off those deviations or not trade out of them for too long and instead then come down. DAX is probably moving quite similar, which it is. I do believe this is a DAX 30 as well, performance index, so I do imagine that is DAX 30, but I'm not 100% sure on that. But if you do trade German markets, you'll probably be able to tell when looking at this chart how similar it is to the index you look at. So the same kind of thing, it got a great bounce off that first deviation, and now we're moving back to this midway deviation, and that's what we'll be looking for. I wouldn't personally be touching it until it decides on a way after here, but we'll probably be looking for it to touch this and either pull back to this deviation, which is where I'd be looking to go long, or I'd be waiting for it to break through and come into the 1,700 kind of area, and that would be more an area I would either lock in profits or look to short. I'll actually place these lines so you can kind of get a clearer idea of the locations I'm looking at. And again, I'll do that on the Ftse 100 real quick, just so if you want to have more kind of written down price targets, you can see that quite easily. But those are the kind of targets we are looking at. Now we'll go over I think it's a nickel 225. And as you can see on this, it's actually pulled back a lot greater than the European indexes. But this is just showing us that considered right now, that the nickel is a bit undervalued and is a good long area. Like if you're just looking to invest, this is well, you could buy it anytime now and it's considered a relatively good deal. However, if you're looking more for the trading or just a better price on the investment, that 27,000 area is looking like a good area, and it does look like we would probably come down to this sooner than later, because it is looking quite weak. So that 27,000 is kind of the key level. But if we do end up breaking through that, 25,500 and 25,900 would be the next key levels. However, I think that would be a bit optimistic to think we would get down to those levels. And if you do end up investing either now or looking to trade the bounce around that 27,000 area, main targets would be coming back into the deviation, so around that 28,000, or at least an area to lock in maybe some profits. And if you are, that's more for the trading, I would say kind of trading profit targets, especially if you're not taking on too much risk. However, if you're looking more for the investment side, it could be a good thing to hold on. Obviously, if you're investing, you're probably going to be holding on near enough forever. But if you are looking to kind of get in and out every year or so, 30,000 would be looking like that good area to maybe lock in some profits, wait for a pullback to get back in. Now we'll go over the Hong Kong HSI, and you can see it's the same thing as the Japanese nickel, where it's kind of pulled back a bit more heavily, I would say. And again, here, third deviation, you can see actually is great. That is, if you ever see an index, or any index you believe in, S&P 500, Ftse 100, whatever it is, buy these deviations. This is a great opportunity to buy. And to be honest, if I knew it was on there before, I don't think I can trade them or invest in them on Thinkorswim. I can just see the charts, but that would have been a great area nevertheless. However, now we've bounced off this level. It does look like we will start to get more of a bounce. I don't really think we will continue down. However, if we did, I do think the lowest we would go would be around 23,800. However, I would probably be more optimistic and be saying we're more likely heading towards that 27,500 area. But again, if I'm looking more to trade this, I wouldn't touch this now unless it comes down to that 23,000 area. Or 23,800 area, unless, either that area if I'm looking to trade, or shorting off that 30,000 area. However, if you're investing, obviously I'm not a financial advisor, but this is a area I would be personally happy buying a good amount of the Hong Kong index. The last one then we'll go over is the French index, which I believe is the CAC. I'm not 100%. For some reason it's not actually loading. So I'll cut back to the video when it's loaded. Okay, we're back. You can see it hasn't loaded. Not sure what the problem is. We have given it a few minutes, even tried reloading the platform up, but when looking it does say delayed, so I don't know if that's the issue or more on the Thinkorswim side of things. But either way, that is the main kind of recap over the stocks. If you're looking more for trading or a bit of investing, those are levels I personally would be looking for. However, if you're looking more to get an even better price, or you think the markets maybe will turn into maybe a bit more of a bear market, and you think the price will go even lower, I'll just give you some other price targets I personally would be looking at. But these are more for the less optimistic people for the near future, I would say. So if that's where you want to leave the video, hope you enjoyed. Drop a like and subscribe. Hope to see you in the next one. If you're staying on, we will go through all that now. So the two charts we will look at is the 3-year weekly chart and the max chart weekly. So we're still looking for the same kind of thing. Again, we're just looking for the bounce off the deviation levels. However, you can see when you're looking at this kind of chart, the Ftse is considered a bit oversold, and the reason for that will be because of the original kind of COVID pullback. It knocked off the deviations, and it's kind of just kind of shocked by how quick it responded. So this will be considered oversold. So if you're looking more at this and you're looking for price targets of this, the 5,800 area is a good buy. 5,200, 4,600 are all good areas, and the same kind of on the max chart, the weekly max chart. These are all considered good areas of buying, or low risk areas of buying. And if you're looking more for it when you think it's going to reverse, you can see it's kind of not including the shorter term frames like the yearly charts we were looking at. High areas that we could continue to see that strong bounce to the downside will be around that 7,500 area. So just to recap, low risk buy areas: 6,300, 5,800, 5,700, 5,200, and 4,600. And again, if you're maybe already in the Ftse and you're looking to maybe lock in profits, these could again be good areas to look into selling some profits, which is near enough all-time highs, or quite close to all-time highs on the Ftse. Same thing on the DAX. If we clear actually we'll leave them on, so there we can see how kind of similar they are. But again, if we're waiting for that reversal, these are key levels we're looking at. Will be around that 15,000 area. Obviously that's where we already are, and as you can kind of see, we're kind of just hovering around this level, still trying to make its decision whether it wants to break higher or break back down. And again, the next test will be around that 1,600 or 16,000 area. While it's in this range, it's kind of hard to pick a direction, and it will be better to just kind of wait until it breaks out, has a couple of days, maybe closing below one of these levels, and it may provide a bit more of a clearer direction. However, if it does continue up, good areas to maybe either lock in profits or start to maybe short it, which is kind of a hard. Well, I personally just don't like shorting indexes. Just don't think it's the smartest thing to do, but if you're looking maybe for just a few day trade, I guess it is fine. But those would be around 16,800 to around 17,400 area. And again, if you're looking more for the low risk kind of buy areas, which are going to be much lower than they are on the weekly or on the yearly charts, they could go all the way down to 13,000, all the way down to 9,500. All these areas here are considered low risks, and would be good areas to start maybe throwing in some money if you're looking to throw some more into it. Now let's go over Japan. The 225 again, key levels to kind of look in or look to buy, low risk areas. You can see them all on the screen now. Anywhere from 24,000 all the way down to 16,000 are all considered, each of these areas, low risk bounce areas. And again, if you're looking to maybe lock in some profits or short, 30,500, 33,500, 29,900, 33,300. And so on. I mean, you can see all the levels here. 36,000 again as another key level. You can kind of ignore the fourth line, which is the fourth deviation, as indexes hardly ever hit those kind of levels. To be honest, I don't think we will really ever see them. I don't think they even hit that kind of the fourth deviation in COVID, when we had the 2 weeks of extreme selling. And onto the Hong Kong markets. same kind of thing, low risk. You can see that we did get that low risk entry here, great bounce off there. Or you can even see that low risk there. We have had bounces off those levels. Again, if they're close to this, they're usually a better idea to kind of average in either as it falls down, or have in whatever you're looking in. Let's say you're looking to put even just $100 in there, $50 here, $50 here, is an easy way to do it. And if I'm more trading, that's how I tend to do it. And again, low risk areas: 23,000, 21,000, 19,000, 22,000. When you're looking at these, you might be thinking, oh, 19,000, it's never going to go that low, or it's not going to go there anytime soon. Yes, you're probably right, it won't, but they're just key levels to kind of keep an eye out, and you can just look at them more, the closer ones to 23,000. Not super unlikely that it won't hit that. And again, to the upside, areas to maybe sell or lock in some profits, all placed here. So you got the 28,500 area, 30,500, 31,900 to the 32,200 area. And again, the France one, or the French one, isn't working. So I guess that's kind of it for both the more shorter and longer term levels we are looking at. Any of these levels would be considered though good buying areas, obviously on the downside, and good areas to lock in profits or short onto the upside. So I hope that definitely helps. If you do quite like the standard deviation, or if you use them in the past, know how accurate they are. They do come in very handy, depending obviously if you're maybe watching this video, you probably don't trade, or you're not living in the US, or have access to Thinkorswim, as it's I think it's only US based. You might be able to get it in some Asian countries, I believe, but most people don't have access to this, and I haven't found other brokers that do it as well as Thinkorswim. So if you do have Thinkorswim, I definitely recommend trying out some standard deviations, whether that's for trading, investing, or both, and seeing what you think of it. But that's it for the video either way. This was probably quite a long video, so thank you if you did watch the video the whole way through. If you did enjoy it, drop a like. If you didn't, drop a dislike. Hope to see you in the next video if you're going to stick around, and that's it. Peace.